Good afternoon, everyone. I, CS Yogesh Jha from Institute of Company Secretaries of India, extend a warm welcome to our respected speaker and participants who have gathered with us today for enlightening session on shareholders, democracy, and activism under the umbrella of EEE 5.0 Master Knowledge Series. Before we delve into topic, we have delighted to announce that applications are open for prestigious ICSI National Awards for Excellence in Corporate Governance for the year 2025. This year, we are celebrating the 25th edition of this award for honoring excellence by recognizing the organizations that set benchmarks in corporate governance. Applications are also open for ICSI Lifetime Achievement Award, ICSI CSR Excellence Awards, and ICSI Business Responsibility and Sustainability Awards. For further details about the awards process and categorization, visit the ICSI website. The last date to submit the application has been extended to 31st August 2025. Also, we are overwhelmed to announce 4th ICSI Board Mentorship Program to be held from 18 to 21st September at Kalimpong, West Bengal. For further details, please visit ICSI website. Coming to the topic of the shareholders' democracy and activism, shareholders' democracy and activism have emerged as a crucial pillar of the corporate governance in today's business landscape, ensuring that the voice of shareholder is not only heard, but also meaningfully integrated into the decision-making process of companies. Shareholder democracy and activism are vital to strengthening corporate governance by ensuring transparency, accountability, and active participation of investor in company decisions. Shareholders' democracy and activism encourage companies to remain accountable, transparent, and responsive to shareholders' expectations. For the company secretaries that represent both a responsibility and opportunity to act as facilitator of dialogue, ensure compliance with legal frameworks, and guide both in adopting practices that strengthen investor confidence and long-term sustainability. For detailed deliberation on the topic, we have expert view. We are honored to have with our distinguished expert, CS Pramod Kumar Roy, who bring with him the deep regulatory insight and practical experience. It's my proud privilege to read his profile before our members. Mr. Pramod Kumar Roy is a qualified company secretary and a law graduate from Delhi University. Over the past 28 years, Mr. Roy has worked for leading listed companies in various capacities in the field of governance, legal, corporate, secretarial, compliance, and investor relations, audit, and insurance. He joined Nestle India Limited in September 2004 and took over as a company secretary and compliance officer of the company from October 2022. Over the years, Mr. Roy has assumed responsibility to oversee governance, corporate legal compliance, and investor relation, and he is also non-executive director of National Business Services India Private Limited, a fellow subsidiary of Nestle India Limited. Mr. Roy is a member of Corporate Law Committee of FICCI CII, National Committee on Regulatory Affairs, and members of the various boards of the Institute of Company Secretaries of India, such as Secretarial Standards Board, Governance and Compliance Standard Board, ESG and Sustainability Board, Quality Review. We are privileged to have such an eminent speaker to deliberate on the today's topics, and I am confident that today's deliberation will enrich our understanding and equip us with updated knowledge. Once again, I welcome you all. Thank you for your time to join us today. Let's engage, learn, and grow together. Participants are requested to post your queries, and we will take up the queries at the end of the session. Now I request our distinguished speaker, Pradeep sir, to share his knowledge on the topic.
Thank you, CS Yogesh. Just let me know when the screen is visible.
Yes, sir, it is visible
now. Good afternoon to all fellow participants. First of all, wish you a very happy Ganesh Chaturthi. This is a very special occasion, and I wish to thank ICSI team for providing this opportunity. Before I start my presentation, I just want to give a disclaimer that these are my personal views for general discussion only, and this does not explain my organization's position. I intend to speak for about an hour, then we'll open for question answers. It is truly a privilege to join you today for this webinar on the shareholder democracy and activism. So today I have divided my entire presentation into 8 parts. First, we'll discuss about idea of shareholder democracy, evolution of shareholder democracy, some of the legal frameworks, shareholder activism, benefits and risks of shareholder activism, future of shareholder democracy. Then what should be the role of CS and governance professionals in ensuring that the shareholder democracy and shareholder activism is in checks. And finally, some closing comments. Directly dwelling into the topic of idea of shareholder democracy. Friends, when we hear the word democracy, most of us think about politics, elections, votings, governments. But I want to invite you to think of democracy not only as a political construct, but as a principle of life. A principle that applies equally in boardrooms and shareholder meetings as it is in the parliament. To bring this life, let me turn to a story that is part of our civilizational memory, the Bhagavad Gita. On a battlefield of Kurukshetra, Arjun stood confused, paralyzed by doubt, unable to take a decision. And Lord Krishna, his guide, his mentor, his charioteer, did something remarkable. He did not impose his will. He did not issue an order. He did not say, Arjuna, this is what you must do. Instead, he shared knowledge. He explained the principles of dharma. He laid out the consequences of action and inaction. And finally, Krishna said these words, Yathechasi tathakuru, meaning having reflected deeply, act as you choose. Think that for a moment, the divine teacher himself, after all the guidance, left the final choice to Arjuna. And isn't that exactly what shareholder democracy is? The board and the management may guide, they may recommend, they may present data and reports. Regulators may provide guardrails, but the final choice, the power of decision, rests with the shareholder. Each shareholder is like Arjuna on a battlefield of governance, empowered to make a choice that determines the direction of the company. So today, friends, I want to take you on a journey through this idea of shareholder democracy. We'll explore how it has evolved, how shareholder activism has emerged as a natural extension of democracy, what examples we see in India and abroad, and what the future holds for our markets and companies. And throughout this, I will be returning to that Bhagavad Gita principle, empowerment through knowledge, choice through reflection, and responsibility through action. And lastly, the role of CS and governance professionals in ensuring the shareholder democracy. Friends, let us consider why should we talk about shareholder democracy and activism now. Let me share a few facts. India has over 15 crore demat accounts. That means more than 150 million retail investors are participants in our market. 10 years ago, this number was barely 1/4 of that. Mutual funds today manage over 50 lakh crore in assets, and they are not silent spectators. They vote, they engage, they demand accountability. Regulators like SEBI have made e-voting mandatory for key resolutions, ensuring that every shareholder, big or small, can participate without needing to physically attend an AGM. This is a sea change. Now, why it is gaining significance over the last 2 years? 20 years ago, the AGM of a company in India was often a just routine affair. Shareholders would gather, listen to chairman's speech, perhaps ask a few questions about dividend, and then resolutions would pass or almost unanimously. Today, we live in a world which is different. Shareholders are questioning proposals on related party transactions. They are voting against executive pay. They are voting against promoter being appointed as chairman. They are voting against royalty resolutions. Proxy advisory firms have gained immense significance. They are analyzing every resolution, giving recommendations, and resolutions are not always passing. In some cases, they are being rejected by the shareholders. And this is a recent phenomena. The level of engagements with the institutional investors has been at a different level altogether. Now let's talk about changing dynamics of stakeholders. Over the years, institutional investors, retail investors, and as I also said, proxy advisors have not hesitated to question management on compensation, strategy, succession, and capital allocation. The company has had to listen, respond, and adopt, all three. It's not just they respond, they listen, but then don't respond or they don't adopt. That's the democracy in action. So clearly, the subject we are discussing today is not just academic. It is real, it is current, it is shaping boardrooms in India. Friends, let me also clearly state one thing at the outset. Shareholder democracy is not just about rights. It is equally about responsibility. Voting without knowledge is like Arjuna without Krishna's counsel, impulsive, perhaps even destructive. Democracy only works when choice is exercised with reflection. Similarly, shareholder activism is not about constructive engagement. It's not for the sake of noise. It's more about nudging the boards or management towards better governance, more accountability, and sustainable value creation. This is what nowadays shareholder activism is. So as we journey together in this session, I will structure my thoughts in 5 parts. First, we will trace the evolution of shareholder democracy from passive ownership to active participation. Second, we will visit some of the regulatory framework which govern shareholder democracy. Third, we will look at shareholder activism, what it means, how it has manifested globally and in India, and what examples can we learn from. Fourth, we will discuss the benefits and risks of activism, because like fire, it can cook your meal or burn your house. And finally, we will reflect on the future of shareholder democracy in India, what lies ahead as retail investors, institutions, and regulators continue to shape this journey. At this stage, I will pause and ask you to reflect, maybe even to share in the chat, because democracy, after all, is about participation, not a monologue. Maybe you can share your thoughts on the chat. So let's begin the journey. Friends, to understand where we stand today, let's step back. In the early decades of Indian corporate history, companies were often promoter dominated. Decision making was concentrated in the hands of a few. Usually, the founding family or tightly knit groups of insiders. Shareholders were, for the most, passive financiers. They trusted management, collected dividends, and rarely intervened in the strategy or governance of the company. Annual general meeting in those days were more of a ritual. Shareholders might raise questions about freebies, the quality of samosas, or the gifts given after the meeting, but very few were seriously challenging board decisions. The idea of shareholder democracy existed in theory, but not in practice. Globally also, shareholder participation was limited. In the mid-20th century, boards and management teams had significant leeway with limited oversight from investors. But as market grew, as scandals erupted, as economies grew, as institutional investors began to wield influence, the pendulum completely shifted now. India's story has been one of a very steady resolution. It's not a jumpy ride or a bumpy ride. India's story has been very steady. In the year 1990s, with the liberalization and opening up of markets, corporate governance began to gain attention. Global investors demanded higher standards. In 1999, the Kumar Banglam Birla Committee laid foundation for corporate governance reforms under SEBI. Over the next 2 decades, SEBI introduced key regulations, Clause 49 of the Corporate Governance, mandatory disclosures, and later on, e-voting. Each of these steps gave shareholders more rights, more tools, and more power. The introduction of e-voting was a game changer. Suddenly, you did not have to travel to Mumbai or Delhi to attend the AGM. Sitting in your home in Patna, Coimbatore, or Guwahati, you can log in and cast your vote. That single reform democratized participation in a way nothing can believe of as of now. In 2020, SEBI went further by strengthening the role of proxy advisory firms. These independent institutions analyze every resolution, issue recommendations, and help shareholders make informed choices. Their reports are now taken seriously by both institutional investors as well as the company. The participation due to proxy advisory firms with the institutional investors have gone up at a considerable level. Let us look at some of the examples of shareholder activism. In 2024, Tata Motors shareholders voted against a resolution to increase executive pay. Prior to this, remuneration resolutions were typically approved without much opposition. Investors indicated that performance should align with compensation. This event marked a change in the shareholder engagement practices in India. In 2017, Infosys addressed investor concerns over CEO's resignation by appointing Mr. Nandan Nilekani as non-executive chairman, restoring confidence and demonstrating the shareholder-driven governance. In 2019, Eicher Motors shareholders rejected managing director's pay raise as too high relative to performance. The company revised its proposal, which was then approved, reflecting shareholders' influence. Similarly, in Apollo Tyres, shareholders voted against a resolution to reappoint the chairman due to remuneration levels deemed excessive by proxy advisors. Consequently, the board was required to reassess the position. In 2018, in ICICI Bank's case, ICICI Bank faced a situation where institutional investors pushed for a fair investigation into allegations of conflict of interest. Imagine it was a whistleblower complaint, but based on the institutional investors, the level of engagement has been very high and the level of scrutiny was very high. This case highlighted how these investors were willing to hold the management accountable for issues which were purely related to corporate governance. In the case of Yes Bank, institutional investors and proxy advisors raised concerns about the management and board of directors led by the founder. Their ongoing efforts led to departure of Mr. Rana Kapoor and a restructuring of the entire board, resulting in better standards. In case of Maruti Suzuki, shareholders raised concerns about the company's limited EV options amid growing competition. If you recall, recently, yesterday only, Maruti finally launched e-Vitara, which is an electric vehicle. This also is not just because of this, but it also results into one thing is better alignment with markets, but at the same time, better alignment with shareholder expectations. Similarly, and lastly, Godrej Consumer Products. They faced challenges growing its personal and home care markets. Shareholders urged a review of strategy, leading the company to launch new organic products and expand internationally to meet consumer trends and expectation. They also faced a scrutiny over related party transactions with fellow subsidiaries. The company pledged to improve, disclosure practices, and therefore they enhanced their oversight to ensure that the transactions are fair. More recently, we have seen cases where shareholders have opposed related party transactions, especially royalty. deals between company and their promoter groups. This is a significant change because it goes to the heart of governance and minority shareholder protection. Now, another major shift that has been is the role of institutional investors. Earlier, institutions like LIC or mutual fund often uh, supported the management unconditionally. But over the last decade, if you see, they have become more assertive. The stewardship code introduced in India have made it uh, clear. Institutions have a fiduciary duty to vote and engage responsibly. For instance, mutual funds in India now disclose their voting records. You and I can go to their website and see how they voted on each resolution. This is initiated by a regulator SEBI and has brought transparency and created more accountability. And foreign institutional investors also have global governance expectations. So therefore, the foreign institutional investors have bought a lot of transparency and shareholder engagement. Large funds like BlackRock and Norges, vote actively on Indian AGMs, often guided by also the ESG considerations. Now, coming back to the role of retail shareholders, perhaps the most exciting development that has been on the rise is the Indian retail shareholder. Thanks to low-cost brokerages like UPI, financial literacy campaigns, India has been an explosion of retail participation. From just 2 to 3 crore retail shareholders a decade ago, now we have more than 15 crore demat accounts. Imagine the potential when 10% of these investors vote actively. This is 1.5 crore voices shaping corporate decisions. This is the sleeping giant of Indian democracy, I must say. Of course, challenges remain. Many retail investors do not actually go and vote, either due to their lack of awareness or the perception that their small shareholder doesn't really matter. But with time, as digital platforms simplify, the processes simplify, the retail participation is bound to rise. I'm sure many of you would have read the post of investor Mr. Vijay Kedia on X titled Ek Chutki Share Ki Keemat, and he urged boards to respect shareholders' rights and be accountable. After the AGM of Mr. The company which is GKB ophthalmics incident, this draws attention to minority investors' voice actually, even though reportedly holding only one share in the company. Leave aside the manner in which it has been demanded, but the retail shareholder demanded MD's resignation, citing persistent loss despite leadership experience and erosion of share price. This episode underscores nothing else but rising investor activism and the importance of board effectiveness to even the smallest shareholder. Now we come to the global perspective. It is useful to compare India's journey with global trends. In United States, shareholder democracy is deeply entrenched. Say on pay votes, shareholder proposals, and proxy contests are routine. Shareholders at companies like ExxonMobil and Apple regularly propose changes, from climate changes to board composition. Elon Musk's recent acquisition of Twitter, all of you know, it involves strong shareholder activism with demands for management accountability, transparency in the acquisition process, and a restructuring of the board's governance. This led to significant changes in Twitter's even the corporate governance structure. In Europe, ESG activism has gained tremendous traction, and investors in companies like Shell and Volkswagen have pushed hard on climate commitments. In Japan, where management has traditionally held power, shareholder voices are growing, especially from foreign investors, advocating for higher returns and governance norms. India is catching up in this journey, and the direction is clear. We are moving towards a world where boards cannot ignore shareholders, where accountability is not optional, and where democracy is not symbolic but real. Let me pause here and ask you to reflect. If you are an investor yourself, have you ever voted at an AGM? Do you feel your voice really mattered? Or otherwise, if you are a corporate professional, how seriously does a company take shareholder votes outcomes? Are they seen as a compliance ritual or as genuine feedback from owners? Just pause back and think about it, because ultimately, democracy is only as strong as seriousness with it, which is it is exercised. Just touching upon, I know this is a slide which really doesn't help all the corporate professionals, but just to remind you some of the legal framework which is available under Companies Act. Friends, as far as voting rights are concerned, every shareholder has the right to vote on resolutions proportional to the number of shares they are holding. Similarly, they are allowed to speak during the AGMs, and they can also propose agenda items for the EGM. There are certain resolutions in which they can vote and they can propose to the management, which are bound to be accepted by the management. You have minority shareholders who can file applications to NCLT for relief against operation or mismanagement. This protects the interest of minority shareholders and also ensures their voices are heard. Disclosure of information under, for example, as part of the board's report, companies are required to disclose relevant information in their financial statements and annual reports. This transparency allows shareholders to make informed decisions and also hold management accountable. Another one is with regard to independent directors. Shareholders have a voice to appoint independent directors and ensure their interests are protected and that they have a representation on the board. Another important factor which has changed the way the companies are being looked at is the societal activities that they do. They have to spend a specified percentage of their profits on CSR activities, and thereby they are obligated to demonstrate a broader impact of their operations on society and shareholders. If you talk about SEBI regulations, they play a crucial role in promoting shareholder democracy by establishing guidelines for listed companies regarding transparency, accountability, and shareholder rights. If you see the continuous disclosure obligations, listed companies must provide timely and accurate information to shareholders and the stock exchanges to ensure that there is a transparency in corporate governance. Needless to say, it includes quarterly disclosures to Regulation 30 disclosures from time to time. There are other corporate governance standards which has been specified, which includes composition of the board, establishment of committees, risk and compliance management systems, vigil mechanism, and disclosure of related party disclosures. So besides, there are other, if you just go to Regulation 4 only, it will take about 2 hours to explain the principles of disclosure under governance. This is all in the interest of the minority shareholders and in the interest of shareholder democracy. Then you go to business responsibility and sustainability reporting. Nowadays, it is an important criteria how institutional investors, mutual funds, and big investors really look at carefully the business responsibility and sustainability reporting of every company nowadays, and they compare for the investment purposes. Then we have SEBI insider trading regulations, which requires the companies to disclose UPSI to the stock exchanges and in the general public. This protects shareholders from unfair advantages that companies or the insiders may take. Similarly, you have SEBI takeover code. This requires companies to make some mandatory open offers to the existing shareholders. This really helps as part of the shareholder democracy. This is one of the biggest boon that we have. So friends, we have traced the journey of shareholders democracy from passive ownership to active participation, from promoter dominated AGMs to shareholder questioning, voting and shaping outcomes. Also, we have touched upon gist of the provisions outlined under the Companies Act and the SEBI regulations. Now we move on to a different topic, which is shareholder activism. As the topic of the seminar is shareholder democracy and activism, this is a natural expansion of this evolution to shareholder democracy. But once you have people a voice, they will just not use it to say yes or no. They will use it to demand change, to push for accountability, and to shape the future. Friends, if shareholder democracy is about rights and responsibilities, then shareholder activism is about putting those rights into action. It is one thing to have right to vote. It is another to use that vote to bring about change. This is activism. Let us define it little clearly. Like shareholder activism is what? Is when investors, whether individual, institutional investors, or a group of investors, they use their right to influence the company's behavior. This can range from, say, voting against resolutions at the AGM, or demanding change in board composition, or questioning strategy, merger and acquisition, capital allocation of the company, or pushing for higher performance or ESG standards even, or in extreme cases, launching campaigns to replace the directors. Now, activism can take many forms. Some are quiet and behind the scenes, private conversations with the board. Some are public and noisy, campaigns in the media, shareholder proposals, even court cases. But the essence is the same. Shareholders are not passive now. They are engaged owners nowadays. Now, coming to the global examples of shareholder activism. Globally, activism has a long history. In the United States, for example, when well-known investors like Carl Icahn gained fame for their aggressive activism, Icahn would buy large stakes in companies and demand actions like asset sale, higher dividends, buybacks, often focusing on short-term gains. Some viewed him as corporate trader, while others considered him as a champion of shareholder value. Activism in Europe focuses on more environment, social, and governance issues. Shareholders of companies like Shell and Volkswagen pushing for stricter climate goals and greater accountability for emissions. This is something which is very much happening in Europe. Japan. Foreign investors in Japan are increasingly demanding higher dividends, better governance, and the reduction of cross holdings from companies who are traditionally management dominated. Even conservative Japanese boards are starting to take notice of these demands. Do you notice something? Activism is not about always money. It is increasing the value. Not just value, but also the sustainability, fairness, long-term resilience. So it has not just been limited to something which is a return to the shareholder. It goes beyond in the value creation and even shareholders' long-term value creation on any holding of any listed company. Now we come to come home back to India. For a long time, activism in India was very muted. Promoter dominance, cultural respect for authority, and limited institutional assertiveness meant most resolutions passed smoothly. But that is changing fast. As I said, in 2014, shareholders of Tata Motors rejected a proposal to increase executive pay and indicated clear message that performance and reward must go hand in hand. In 2016, Cyrus Mistri's removal as executive chairman of Tata Sons led to a significant corporate governance dispute. This high-profile case raised important questions about the rights of, for example, minority shareholders compared to the influence of promoters in Indian companies. Eicher Motors, shareholders of Eicher Motors voted against a steep pay hike of the managing director. The company had to revise the proposal. In 2020, a resolution for reappointment of chairman just because of a high remuneration package was opposed by the institutional investors. The company had to rethink about the resolution. In 2018, everybody knows Infosys shareholders has repeatedly demanded clarity on both governance and succession. Episode with then CEO highlighted how even India's most respected companies are immune to shareholder scrutiny. In 2019, the shareholder activism at CG Power, it resulted in the removal of promoter from his chairman position. Why? Because of due allegations of financial mismanagement. This incident highlighted shareholders' growing readiness to challenge management and demand accountability. This was a huge change. If you all recall, in 2021, shareholders' activism at Z Entertainment was evident when Investco, a major investor, called an AGM to remove the directors over governance issues. This led to a change in leadership and also merger discussions with Sony. Minority shareholders and institutions at Fortis successfully opposed promoters' efforts to favor their own deals, leading to improved governance and a more transparent bidding process. We can go on, and finally, if we see in case of Satyam, one of India's largest corporate frauds, it involved significant financial statements, misrepresentation. What was the reason? Due to weak internal controls and board complacency. It prompted shareholders to demand accountability and reforms that finally led to the complete change in the regulatory landscape and brought a stronger corporate governance in India. These examples show us that Indian shareholders are fighting and finding their voices, and companies are having to listen to these shareholders. Coming to the last leg of shareholder activism, an important catalyst in that journey has been a rise of proxy advisory firms like ISS, SES, InGovern, which are local proxy advisory firms. Even international proxy advisory firms like ISS and Glass Lewis, they have gained a significant influence now. As per SEBI regulations, proxy advisors are required to disclose their conflict of interest and ensure that their recommendations are based on a solid and robust analysis, thereby empowering shareholders for better information. Proxy advisory firms have specific voting guidelines now that emphasize fair treatment to all stakeholders, ensuring board decisions do not favor one particular group over another. Their reports are based on publicly available information. They evaluate key agenda items such as executive remuneration to independent directors' appointments, and nowadays their voting recommendations significantly influence institutional investor votes. As seen in numerous cases as Apollo Tyres, Eicher Motors, Nestle, Hindustan Unilever, Vocard, there is a huge engagement with these stakeholders nowadays. Why I am detailing the voting guidelines by proxy advisory firms? I don't think that there is a better way to get a guidance of ensuring the shareholder democracy for CS and governance professionals. The reason for detailing the voting guidelines provided by these proxy advisory firms is to offer a resource for shareholder democracy and governance professionals. If you go and pick up their voting guidelines, they provide their philosophy, all the basic provisions which are applicable for any agenda item which are required to be placed before the shareholders. It gives a very fair idea of their thinking. I could say even if proxy advisory guidelines are followed, which not only encompasses all the laws, but also sound reasoning, much of the associated activism is effectively addressed, let me tell you. So activism today is not just about individual investors raising their voices in the AGM hall. It is about an ecosystem, proxy advisors, institutional investors, regulator, retail shareholders. They all work together to hold the board responsible. With that, I would move to what are the key benefits and risks of shareholder activism. Activism is not always very comfortable. No board enjoys being questioned. No management enjoys being opposed. But activism brings several benefits. Firstly, it brings accountability. It keeps boards and executives answerable. A board that knows shareholders are alert, are less to be complacent. The complacency is the biggest factor where boards get into mundane performances, quarterly performances, and they forget about the shareholders. They won't think about their own benefits. The level of transparency really helps shareholders to assess about the company. Secondly, it fosters better governance. It discourages, for example, excess pay. It discourages shady related party transactions. It discourages the misuse of capital. So these are a few things which foster better governance. Thirdly, it leads to also long-term value creation. For example, it ensures companies focus on not just on quarterly profits, but on sustainable strategy. And finally, it aligns with the global standards. As Indian companies attract global capital, activism helps bridge governance expectations from all these institutional investors who come and invest in India. Think activism as for example, a mirror. Sometimes the reflection is very uncomfortable, but it is necessary to correct our own posture and not the mirror. Coming to the risks of shareholder activism, of course, like fire, activism can both nurture as well as it may destroy. But the risks of shareholder activism includes very a short-termism. Some activists push for quick fixes, high dividends, asset sale, buyback. They are in a hurry. They want to make money and get out. They may harm the long-term strategy of the companies. Secondly, the special interest of few large investors. They invest in the companies, they invest in the IPOs, they have vested interest, they want to get out soon. So they have their own agenda items, which is not very collectively good for the entire company or the shareholders. Thirdly, disruption. Excessive confrontation can destabilize management, distraction from the main business, and sometimes it creates uncertainty as well. And finally, information asymmetry. Many times retail shareholders just follow the institutional investors and they invest in the companies without fully sometimes understanding the issue. Let me pause and ask, if you were a shareholder in one of the companies like Tata Motors, Infosys, Z, would you have voted with the board or against? And if you are part of a company, how would you handle a situation where 40% of your shareholders oppose a resolution? Would you push it through or would you rethink? Because these are not hypothetical situations nowadays. They are real. Boards across India are facing them today. Moving to next section, which is future of shareholder democracy in India. Friends, we have now We have seen now how shareholder activism has moved from theory to practice. In Exxon boardroom, in Exxon Mobil's boardroom in Texas, in Shell's climate strategy, in Europe, and rise here in India as Tata Motors or Infosys or Z. We have seen the benefits: accountability, better governance, alignment with long-term shareholder value. And we have acknowledged the risks: short-termism, disruption, special interest. The real question is, what next? What does the future of shareholder democracy and activism look like in India? How will retail investors, proxy advisors, institutions shape it? And how should companies prepare for it? Friends, we have journeyed through the idea of shareholder democracy, its evolution, and how activism is shaping company today. The natural question is, what lies ahead? The biggest, according to me, the change is the rise of retail shareholders. Firstly, we must recognize the power of shareholders, which are small shareholders. In the last 5 years, India has witnessed a surge of new investors entering the markets through platforms like Zerodha, Grow, Paytm Money. The number of demat accounts have crossed, as I said, more than 15 crores. Retail investors are no longer silent spectators. Social media has given them a voice. If they feel wronged, they take on to Twitter, LinkedIn, Telegram groups. Their collective sentiment can move stock prices and influence perception. In the coming years, according to me, retail investors will play a far bigger role in shareholder democracy. But that also means we must invest in the education of shareholders, financial literacy, so that their choices are informed, not emotional or going behind the investment pattern of institutional investors or mutual funds. Secondly, increasing institutional investors' assertiveness. The institutional investors like mutual fund, pension funds, sovereign funds will continue to assert themselves. Already, SEBI regulations require them to disclose how they vote on resolutions. This transparency has made them more responsible. When large mutual funds vote against excessive, for example, pay or against related party transactions, companies do take notice of it. This trend will deepen in future. Institutions will no longer be passive. They will be active guardians of governance. Thirdly, as I mentioned earlier, proxy advisors will gain significance as shapers of governance and will grow in influence. As companies becomes more complex and as retail participation widens, proxy firms will serve as the Krishna, as I said, interpreting the dharma of governance and guiding investors. Their analysis will set benchmarks. What is fair remuneration? What is good succession planning? What is transparent disclosure? Companies that ignore proxy advisors do so on their own risk nowadays. In the future, boards will have to engage with proxy firms proactively to reach to board decisions. Fourthly, ESG will be a new arena in activism. Globally, the frontier of activism is shifting from pure financial performance to sustainability and ESG. India will be no different in future. Investors will demand the companies disclose their carbon footprint. They will push for diversity of boards. They will question supply chain for labor practices. Although we see global funds screening Indian companies on ESG performance, for many investors, this is not optional anymore. It is a requirement. So Indian companies that ignore ESG concerns will face not just regulatory pressure, but shareholder activism as well. Then you come to technology and transparency. Technology will transform how shareholders' democracy is practiced. Virtual AGMs, e-votings, real-time disclosures, all these are here to stay. Imagine an AGM where lakhs of shareholders across India are now logging in, asking questions and voting instantly. There is no longer science fiction. It is now a reality. Technology also means greater scrutiny. Every decision, every disclosure, every omission is analyzed in real time by investors, analysts, and even AI-driven tools. The board and CS professionals must prepare for a world where nothing can be hidden, everything will be questioned. Finally, challenges ahead. Let me be also realistic. The road is not that smooth going forward. Many Indian companies are still promoter dominated. Balancing the promoter rights with shareholder democracy will be a very delicate phenomenon. Retail shareholders, though rising, may lack expertise to evaluate complex governance issues, and that is why they need more education. They need more awareness in the market. There is always a risk of activism being hijacked also by a vested interest of few. So these are the few challenges. There is also an inherent equality also, where institutional investors often have more influence and resources compared to retail investors. That also sometimes hampers the shareholder democracy. Therefore, the future of democracy of the shareholders will depend on maturity of the boards, the investors, and of the regulators as well. The Bhagavad Gita reminds us, Yukta karma phalam tyakta santim apnoti naisikam. The one who acts with balance, giving up attachment to outcomes, attains true peace. For activism too, balance is the key. We must not be attached to ego or short-term wins, but to the larger dharma of governance and fairness. Now I come to section 7, which deals with what should be the CS and governance professionals do in such circumstances, where how do they really support the company. So let me offer some of the thoughts on how CS and governance professionals can prepare themselves. The first and the foremost is engage proactively. Don't wait for activism to erupt. Engage with shareholders regularly, especially institutional investors, proxy advisory firms, understand their views, go and check their voting advisories. If your agenda items are not aligned, go and discuss with them. They are very open, they are very transparent. They will not move out of their voting guidelines because it is more than the law that they have written. But still, it helps in if you go and engage with them. Be transparent. Disclose more than the minimum information which is required. This really reduces the suspicion. Then one of the biggest differences with the institutional investors, with retail shareholders, is the alignment of pay with performance to the directors, key management person. Excessive remuneration without performance will always attract criticism. Also, particularly nowadays, there is a tendency where companies are ensuring that ESG targets are included in the performance criteria of the CEOs and the management. Fourth one is respect minority voices. Even if a resolution is passed with 70% approval, listen to the 30% that opposed. Analyze the resolutions why it was opposed by a mere 30% or 20% of the minority shareholders. There could be a pattern in the long term which indicates that there is much brewing in the company. Fifth one is to think long term. Show investors that your strategy is sustainable and not just profitable. Companies that embrace shareholder democracy will find activism always less threatening. They will see it as feedback, not as confrontation. With that, let me just return where we began, the Bhagavad Gita. On the battlefield, Krishna did not force Arjuna's hand. He gave him knowledge. He gave him perspective. He gave him freedom to decide. that is the purest form of democracy, guidance without coercion, freedom with responsibility. In the same way, shareholder democracy gives every investor a voice. Boards and the governance professionals like Krishna must guide with wisdom. Shareholders like Arjuna must decide with responsibility. And activism, that is Arjuna picking up the bow, not staying silent in doubt, but acting with conviction. So as we look ahead, I see a future where Indian companies and Indian investors walk this path together. A future where every vote matters. A future where governance is not just a tick box, but a culture. A future where activism is not a nuisance, but a force for good. That, my friend, is the promise of shareholder democracy and activism in India. Thank you very much. I close my thoughts here, and I'm open for any question and answers. Over to you, Yogesh.
Thank you so much, sir. Yes, sir, we have received some questions. So I'm starting with the questions. So our first question we have received that what point should be kept in mind while drafting AOA to protect the right of minority and majority shareholders?
Could you repeat what?
So what are the points to be keep in mind while drafting the article of association to protect the right of minority and majority shareholder?
See, as far as articles of association are concerned, those are pretty standard as per the Companies Act. But if the company wants, there are many companies who have given special rights to the small shareholders, the shareholders who are holding certain percentage of below 10%. What is a specified right, for example, for presenting their agenda items to the board, to the management? They have provided special rights to the shareholders, even minority shareholders, to represent and propose the agenda items to the board and management.
And so second question is, what could be the possible changes in the law or policy to encourage effective shareholder democracy we can expect from the government?
See, according to me, the laws are pretty well defined in terms of Companies Act, in terms of SEBI regulations, in terms of general understanding of shareholder democracy. I think there are enough laws. What is required is the intent of the board of directors, intent of the management, and also the support and guidance of the CS professionals. They are not just nowadays the quarterly advisors to the company. They are part of the strategy. They enable the strategy of the company. They ensure that company is protected. Even stakeholders are protected. So all sort of guidance which need to be given is by the professionals to the company. I don't think so there are more laws which are required for including shareholder democracy and giving more edge to the shareholder activism.
So next question is, as a company secretary, how to balance between the board management and the shareholder influence in the company?
See, one is it all depends upon business to business, and also depending upon whether it is a multinational company, it is Indian promoted company. What a CS professional is required to see is that the laws which are applicable, for example, most of the time the conflicts are around the board composition, the quality of directors that are on the board, the appointment of independent directors, the disclosures with regard to related party transactions, the conflict of interest, and disclosures by the directors. Those are the areas where company secretaries need to be very careful and draw a balance between the promoters and the minority stakeholders. For example, if it is a listed company and they want to, it's a manufacturing company and they want to hire somebody for the purpose of services, and it's for a fellow subsidiary across anywhere outside India, the company secretary should question why this employee is being hired. they should explain to the board. It is not written anywhere, but if one company's promoters are holding only 51%, the explanation that 49% is owned by the minority shareholders has to be ingrained in every action, whether it is HR, management, or board of directors.
Yes. So one question we have received, that how a CS can ascertain the reason of not supporting the resolution by some shareholders.
Sorry, I didn't get you.
So how a CS can ascertain the reasons for not supporting the resolution by some shareholders?
See, it all depends. Even the company secretary knows even before the agenda item is put before the shareholders,
Yes.
whether this is going to go through or not. The best shot, if at all, everything. See, you pick up a company like Tata Steel. Tata Steel has number of subsidiaries, but the level of disclosures, even for related party transactions, it's worth learning. Anybody just pick up the kind of disclosures they make as far as related party transactions are concerned. So what I'm trying to say, number one is complete transparent disclosures, accurate disclosures, timely disclosures. All the information which is required for any shareholder, not just promoter shareholder, any shareholder to take a decision has to be included in the resolution. Number two, if you have large number of institutional investors, nominee investors, investors through nominees, you have to empower the independent directors to decide on those resolutions. When you are placing a shareholder resolution before for the board to be proposed to the shareholders, the independent director should be fully convinced that this resolution will go through. And the last part is the shareholder engagement. The company has to engage with the institutional investors. I'm just saying, just as I said, just pick up the voting guidelines of any proxy advisory, whether it is IIS, SES, INGOVERN, ISS, any international or national, local. They specify what law it is applicable. What are the guardrails that company should follow? These are some things which we need to preempt, and before even resolution is put for vote, the engagement has to happen. And obviously, once nowadays it is a very transparent mechanism. We can know how many minority shareholders have voted, what is the pattern over a period of time. For example, if it is a matter of executive pay, we can easily correlate the resolutions and the voting pattern, and then accordingly engage with the shareholders in future. I hope I'm able to answer that question.
Yes. So we will take the last question now. What will be the instances which will be detrimental to the minority shareholder of the company?
See, anything where most of the time the decisions which are most prejudicial to the interest of the companies are where loans, advances are given to the fellow subsidiaries, related party transactions, as I said, with fellow subsidiaries or with the promoter-driven entities. The company secretaries need to be very careful when these proposals are placed by the board or by the directors, and ensure that every sort of guardrail is being followed. While if that is being done, I don't think so there is any decision of the board which will go and which will fail before the investors. But at the end of the day, it is the board. Board has to guide. Board has to bring in all the facts to the shareholders, bring in all the fairness opinions, bring in all the reports to the shareholders, and leave it to the shareholders to decide in any matter which is pertaining to the shareholders. Besides that, it's ultimately the fiduciary's responsibility. If everybody is thinking of a long-term value creation, I don't think so. Nothing. It can go against the company in any way.
Yes. Thank you so much, sir, for giving your time and sharing valuable insights, expertise, and perspective on the topics. Thanks a lot, sir.
Thank you.
And
Thank
thanks
you,
a lot
everyone.
to our participants for your active involvement and thoughtful questions.
Thank you. Thank you, Yogesh. Thanks to all the participants. And once again, happy Ganesh Chaturthi.
Thank you, sir. And sir, thank you so much, sir.
Thank you. So we are disconnected?
Yes, I'm disconnecting. It will be end.
Okay. Thank you.